Hello, good morning. Thursday morning. Thought I'd do an update all things pound, so we have an in-depth look at it. In the past, I'm English. I live in England. I've avoided the pound for the last 18 months or so. Really, it's too close to home. You've got inbuilt biases about what you think, is right and wrong, and that isn't really very good for trading. So I've generally left it alone. I've reported on the signals, but I haven't necessarily traded them. For a start, I am going to say that I am short the pound. So I am talking my position, but I'd like to think that I've been doing this long enough that I can be unbiased in it. So why the reason for suddenly getting involved? Well, effectively for Brexit, we've had okie dokie. Yeah, so somebody says this, somebody says that, blah blah blah. It goes up, down, up, down, up, down. You can really see that for the last 3 or 4 months, really, and a lot of it has been based on what somebody supposedly said or didn't say. We've had a Brexit deal, if you can call it that. I did vote leave. I might as well say what I did, but there was only actually one reason why I did it, and it's what very few people would have this as a reason. And my reason was purely to do with the European Central Bank and the ECB and their 1 trillion plus government debt, open-ended Pandora's box of hell. And at some point that's going to have to be paid for, and if Britain was in the EU and probably one of the biggest payers, we would have some monumental bill that would make the credit crunch probably look like pocket money. So that was my reason for wanting to get out, is purely financial. Quite ironic in that my children, who are late 20s, even into their 30s now, want to be part of Europe. And it was only when I said to them, I said, well, yeah, that's great, it sounds good, but this is the bill potentially, and that's far more scary. And so effectively, they weren't aware of it. They're not involved in financials or anything like that, and I wouldn't expect them to be. It's not something you really read in the mainstream media either. But so that's enough of that. I had 2 minutes waffle there. Let's just look at where we are. Going to start with the pound against the dollar, and what happened yesterday is we've moved up, and we moved up to the daily resistance, which was at 30.60, and if I just go intraday as well, let's move this up a little bit. We also moved up but didn't close above a little zone of resistance, and what's happened this morning is we've collapsed. There was a resignation from the Brexit secretary, which probably not very good, is it? He's meant to like the deal, not anyway. So what's happened is we've now broken out of that range. So 128.27 was the final intraday support, and we've taken this out early this morning. So this now becomes a key resistance level on any bounce. I really wouldn't want to see a close back, daily close back above here, because then it would say, okay, it's all got a little bit carried away. Let's go back to historical. The other thing to think of here is the fact that really, we're, even after a big fall this morning, we're not actually anywhere near the lows that were created just a couple of weeks ago. So from a purely technical point of view, we're still in a broad sideways pattern. However, if we are to continue down, then the target is actually pretty distant at 119.88, and that is a weekly and monthly support, so that's a pretty big level. I'd be booking some profits there. It's also worth looking at the futures, because futures include volume, and so there's more lines. You can see that there's a few more lines there, pink and red, so we get a little bit more reference. And what's happened this morning is we've broken a Heikin-Ashi support. That's one of those pink lines, which is a daily level. I use Heikin-Ashi because it redefines highs and lows, which means they're highs and lows that nobody else has got, which is something I always like. I like hidden levels on especially weeklies and monthlies as well. So we've taken that out, and we're getting what is called divergence as a continuation. So this is what these little arrows are here. And when I talked about it in the weekly update, we'd had it before, hadn't we? So you can see there's been a few in the past. We got extremes back down here and said, okay, it's done enough for now. as far as I'm concerned, divergence is a continuation. What I mean by that is with the trend is something that I very rarely do not get involved in. It takes a hell of a lot for me to say no to it. And here you've had two previous signals earlier on in the year. So let's look at the euro pound. Now, I spoke about the euro pound and said that every time it went above or below the defined sort of range for the year as such, it can never sustain it, yeah, and it always goes back the other way. So breakouts are never for real, as it were. And we had a positive signal last week. We did take that low out, but the critical thing on Tuesday was we didn't make a new closing low, and that's what I call an inside bar pattern. What it means is that when I get some sort of reversal, price actually has to close beyond the high or low of that reversal bar. It doesn't matter if it sort of goes beyond it and then comes back. But what it does do from a risk point of view is expands it, because it now says, well, now I've got to make a close below here before it's truly that buy signal hasn't worked, or that positive signal hasn't worked. So for today, we've come screaming back up. We've got what's called a power play buy, which means we're going way beyond the normalized range for what happens. If we touch this high at 88.52 by tomorrow, then that weekly level is not going to raise. This is where these ideas of levels are predictive. So I know that if we trade at 52 and the high's been 46, this black line is going to go back down again, and it's going to open up potentially space. We go intraday. Pretty quiet, very choppy, and again we busted out of the top early this morning, but where have we gone to? We've gone directly to the final intraday resistance at 88.35, so there is some barriers there, pretty close. So 35 up to 55 is a resistance point. We'd have to close back, make a daily close above there, and also take out that weekly level to say that it was going to carry on. So let's look at some of the cross rates, because there's some interesting things there as well. One of the things when you're trading cross rates, and you might get a signal on the major, is to then, the first thing I tend to look at is say, well, okay, if I could always trade against the dollar, why don't I think about trading against maybe something else, because I want to buy the weakest and sell the strongest. And for example, if I was to look at the daily Aussie dollar, we talked about at the weekly call that we'd move back down, but there was this massive level at 71.59, and we came down to it on Tuesday, and we've held it, and we've sort of moved back up again. So the Aussie is in a positive frame of mind. If I was to do the Kiwi, the Kiwi is not quite the same, is it? We've had a negative, but we broke out of this weekly level, but we've got this massive monthly level sitting above. So there's an example of saying, well, if I had to pick between the two, it would definitely be the pound against the Aussie. So if I go to the pound Aussie, it's been pretty quiet, broadly range bound, had a pretty decent rally in the last couple of months. But then today what's happened is we've taken out a daily support, and we've got what's called a slam dunk signal. So again, that's the extension of range. It's the opposite of this one, and we're trying to break down decisively, and we have a major target at 172.10. If we were to make weekly closes below that, then it would show up as something more serious in terms of where we can actually where we can go to. Might as well look at the other crosses. Let's do the pound Kiwi. So the pound Kiwi's been going down for quite a while, but we haven't got the same level of acceleration, so it's not giving us one of those slam dunk signals. But again, technically it doesn't look very good, and the target is even more distant at 167.05. Key level above 193.41. Let's do pound CAD. Oh. Now, what's happened here is the CAD has been sort of weak based on what's been going on in oil, general carnage there. But again, within this sideways, we are getting a negative signal today. This is a red square, which is based on stochastic-based divergence. I normally would need to see it break out of that sideways to say, yes, I know which way it's going. So not much to get overly enthusiastic there on that one. Let's do pound yen. Again, boy, some massive levels that haven't changed for a very, very long time. We're just stuck in sideways. No interest in there. However, if we were to make a weekly close below that weekly level, 143.25, that would signal a breakout of that sideways and target down to 128.81. Okay, I don't want to make it too long. I will probably do, if we've been volatile, I'll do another update tomorrow just to see how this has all panned out in the short term, and we'll get the weekly update as well. Okay, thank you.